In this video, we're going to be doing a deep dive on Zoetis stock, and they have an absolute monopoly on the animal healthcare industry. On top of that, I think they are the perfect dividend growth company. They have a very low dividend payout ratio, and they do some insane share buybacks. And I believe this company will impress you. And I normally don't make videos about individual companies, but I wanted to do it in this video right here. First off, a lot of people might avoid this one because look at that. They only have a 1% dividend yield. But look at the dividend growth and the dividend payout ratio. They got a 30% payout ratio based off the last full year. And look at the dividend growth. In 2019, it was 65 cents. Now it's $1.50. But check this out. Look at their PE ratio right now. They're trading at 30 times earnings, which actually is a little bit low for them. And if you look at the industry average right here, it's actually 25. So they are trading at a bit of a premium. But again, they have a complete monopoly on the industry. And here's what they do. They have parasiticides. They do vaccines, dermatology, anti-infectives. So let's check it out by individual segment right here. So their parasiticides revenue is up double digits. Look at that. It's up 14% year over year. Then we can go to their vaccines. This one's up 4% year over year. So low single digits, but it's good to see that their top two segments are growing. Here's the third one, dermatology. This one's up 14% year over year. That's actually a new record. Look at that. New all-time high on their dermatology revenue. I mean, we won't go through all of them right here. Like, oh, look at their pain and sedation revenue. That's up 50% year over year. So that's why I think this is a growth company. Look at their revenue right here. They constantly beat what the analysts are expecting, their EPS, their EBITDA. And look at the free cash flow. This is what FCF stands for. They made $784 million of free cash flow in the most recent quarter, which is up 35% year over year. And check out the net income right here. The net income is up 16% year over year to $700 million. So they crank out a lot of net income and a lot of free cash flow. And here's just their top line sales right here, the revenue. It's up 11% year over year, which I think, growing double digits, that's a very great sign. So remember this number right here. They made $692 million of net income just in the most recent quarter. And let's see how much their dividend cost. It literally only cost $200 million. The only reason it's going up every year is because they organically raised their dividend. And check this out. We can look at their cash on hand. They have $1.7 billion of cash right now. And let's see how much total debt they have. So they have total debt of $6.57 billion. Now, that's actually not that much debt at all, because if we scroll down here to their share buyback program, they're spending so much money, over $1 billion a year, buying back their own stock. Or at least in the past year, they spent like 1.3 or 4 billion on share buybacks. They could have instead used that money to pay down debt, but they just don't need to right now. So that's what I love about this company. So if we go to the total common shares outstanding, you now own 1.74% more of the company. And here's why I think if the company is buying back their own stock at, prices they were a couple months ago, the company would definitely be buying back more shares right now. They think the company is potentially undervalued. So that's what I like about the company. Their debt is not a problem. And on top of that, look, so they have $1.7 billion in cash. You can add another $2.4 billion of assets on top of that. So they're very financially stable. And if we check out their stock price right here, they're actually the same price they were back in 2020. So they've really been flat for 4 years. So potentially, maybe buy now on this, kind of uptrend right here. I don't know if you do technical analysis. I don't really do that. I like to look at the fundamentals of a company, but technical analysis is saying that this one's probably going to go up as well. But let me show you their investor presentation. I think this will very much impress you because there's some stats on here that I don't believe. So check this out. This right here sounds just nuts. 86% of pet owners would pay whatever it takes if their pet needed extensive care, which is just a crazy stat. And also right here, when people are faced with a 20% decrease in budget, pet owners will not spend less on their pets. Isn't that nuts? So this industry is one I definitely want to be in. And look at this. This is why I said they're a monopoly. Check this out. By species, they're number one in cattle, number one in fish, swine, whatever. Number two, we can see other pharma. They're number one or number five, top five for all of these different categories. So that's why I'm saying they're a monopoly. I love them. And they're the industry leader. Yeah, they're literally the industry leader. And we can see all the different products. Maybe you've heard of some of these. I haven't because, I actually have 2 dogs. We have 2 dogs. But we've never had any problems, which is good. And they think their industry has a lot of room to grow. I mean, it's not a super impressive CAGR, but look at that, 4 to 6% compound annual growth rate. So for 2028, it's a $70 billion industry, and they'll be the leader in that. They have the most market share. And another really cool stat I found about this company is look at their revenue by market. Only 55% of the revenue comes from the United States. And look at how diversified they are. Animals around the world all need healthcare. We can see their margin expansion, their EBITDA margin, And there was one more slide here I wanted to show you. Yeah, look at this. So, and they say there's going to be nearly 2 billion more people to feed by 2050. Global pop of 9.7 billion by 2050, which sounds crazy, but yeah, we were going to need a lot of healthy animals. We're going to need a lot more animals, and we're going to need those animals to be healthy as well. And they're going to benefit from that, literally just as the human population grows. I'm sure, well, every company just benefits as the population grows. But this is just a crazy stat right here. High income households often have more than one pet and, willing to spend during a down economy. Gen Z and millennials are feeling the humanization of pets. So yeah, I just really like this company. The numbers look good. Industry, we can see them versus their industry proven track record of above market operational revenue growth. This is their competitors, the gray one. They've been outperforming them every single year since 2014, and I think that's when they went public. So, and yeah, 8% revenue CAGR since IPO. Oh yeah, they IPO'd in 2013 compared to the 5%. So 8% beats inflation by a pretty decent margin as well. 5%, just keeps up with inflation. 8% is starting to be pretty decent there. So that's what I really love about Zoetis. They're an industry leader. They pay a dividend, a growing dividend, and they do share buybacks, which suggests to me that the stock price right now could be a little undervalued because we have kind of been flat since 2020. But anyway, I went really quick in this video. I apologize if I went too fast, but I just want to provide you the most value in the shortest amount of time possible. So if you would and you like this kind of content, don't forget to drop a like on the video. I normally don't do individual stock analysis, so if you do like these, let me know in the comments. I will seriously read all of them. But I hope you guys have a great rest of your day. My name is Nathan Robert, and I would appreciate if you hit the subscribe button. But yeah, see you guys later.